time to spotlight the recent equity rally that we've been seeing and the new all-time highs, right, for at least 3 of the 4 major indices. So joining me right now, Caleb Silver's with us, editor-in-chief at Investopedia. Thank you for being here. We got our 40,000 hats. It was here for 10,000. I mean, it's a lot of fun, and some of these are psychological levels. But what are some of the big things that you're watching now as you see the new highs?
Yeah, is this as good as it gets for investors? I mean, we got markets at all-time highs, Dow 40,000, S&P 5,300, NASDAQ small caps, metals, still getting 5% in the bank, crypto rallying again. Are you not entertained? This is a good size rally, and it's a lot of fun if you've been invested for a while. What we've noticed, though, especially back in April, was that individual investors, retail traders, were sitting out of the market. The flows going into individual stocks last month were as low as they were since 2021. So hopefully people are getting back into this. They got to be, because we're at all-time highs, and these things usually lead to more all-time highs.
And we just were hearing how from Tom from the last segment, he was talking about June. That'll be new month, new money, and I'm sure some people have some FOMO and are doing some chasing. To your point, if you look at the fund flows and didn't see so many people in, and now they're probably saying, "Oh, I'm getting back in. I'm getting back in." The other thing that was interesting is you talked about the earnings, the stock buyback, some of the landscape looking good.
Yeah, I mean, if you're an investor right now, or shareholder, the setup is great right now. We know interest rates are eventually going to come down. Is it going to be September? Is it going to be end of the year? Is it going to be next year? Don't know, but they are coming down. That's a good sign. Corporate earnings are improving. We're hearing good outlooks from most companies across sectors. And then they're returning the money to shareholders. That free cash flow is turning into new dividends. Take a Meta, take an Alphabet, or increased dividends and share buybacks. That is just giving money to shareholders, and that's why prices are higher right now. Plus, companies did not issue a lot of new debt last year. They got a lot of debt expiring in the next few years, so their balance sheets look a lot healthier.
So that's all good news there for investors as they see the better earnings environment, the dividends, the buybacks, all that. Also, what's interesting is you talked about the number of new highs. It's somewhat impressive, folks.
Yeah, 23 so far this year, maybe 24 as of yesterday. The average is about 16 a year, going all the way back to 1950. And we're getting them bunched up right now. In the last 12 years, we've had more all-time highs than in any 12-year period in history. So they're coming faster, they come in bunches. All-time highs usually lead to more all-time highs until you get some sort of reversal. But if you look a year out, Nicole, after an all-time high, the market's up most of the time about 10%. If you bought at any other time during the year when it wasn't an all-time high, the average return is around 11%. So buying at all-time high is not a terrible strategy either, but just keep buying, because when we get record highs like this, usually it means more up and to the right.
We have a lot of folks saying if there's a dip, buy the dip, and that would go along with what you're saying. And we see some of the excitement going abroad too, right? I mean, what are you looking at when it comes to the international markets?
Some of the best stock markets in the world are not here in the U.S. In fact, you got to go to South America. Don't cry for me, Argentina. That market is up around 26%. If you look at some of the ETFs around that, ARGT being one of them, Peru, 30%, Colombia, 20%. Why? Big on the export market, right? Argentina's got an interesting political situation, but because they're such a big exporter of a lot of these commodities that have really high prices right now, their markets are doing well as well, pretty well. Turkey up 34%, and China, especially the internet stocks, that KWEB ETF doing extremely well. You've seen a big comeback in the Chinese internet and tech stocks. Hard to decipher what's going to happen with those going forward, but they've definitely outperformed the U.S.
Yeah, so Argentina, Peru, Colombia, Turkey, China, internet, KWEB, which you mentioned. Also, those are the great stock markets. I mean, we've seen growth in India, in Japan. I mean, there are some great, because China was sort of left out a little bit for a while, and people were turning to some of these other countries. And then you have your anxiety index. How are the investors feeling? What are we watching there?
Yeah, they're chill about the markets because we're at all-time highs. That usually calms the nerves a little bit. Still a little bit trepidatious about their own personal finances and the macro situation. Inflation, number one concern. Most people are feeling cautiously optimistic. According to our latest sentiment survey, they're just not putting a lot of money in the markets. Maybe that'll come in the summer. Right now, they're kind of okay, chill, enjoying the higher highs, but not exactly putting new money to work.
It's interesting how you said retail trading hit a 3-year low in April. I mean, people really are missing out on, you can have some water if you like, but really totally missing out on what they've seen because this has been incredible. I was saying if you left in May and went away, but when I looked, it was at 11%, and we had already had part of a good May. So I really should have looked till the end of April, but you would have missed some of the May run. But tell me the point of the story is that people sort of sat out a bit.
Yes, well, some of that is people are tapped out. And when you get tapped out and you're overspent, one of the first things to go is your extra discretionary money towards investing. We know that. You can look at different periods in history. Some of that is tax season. People were paying their tax bills late March, April. That takes away some of your extra income as well. But also, there was that fear as Treasury yields rose, whether or not we were going to get a rate cut or maybe a rate increase. Nobody knew at that time that you couldn't see the future. When you can't see the future as an investor, it's kryptonite. Once that cleared up a little bit with that lower jobs report, right, lower ads, and that cooler than expected inflation report, you saw this really turn around right now. Individual investors getting back to it. Individual investors typically around 24% of the market, Nicole. They were about 18% back in April.
What about personal finance? You know, I always thought that they should teach more, personal financial literacy overall, like in schools from day one. I feel like we should have all learned more. However, where do we stand on that? Because you said personal finance high. What does that mean?
That means that they're worried about their own personal situations. That's inflation. That is making that weekly or monthly rent check. That is being able to afford groceries, which are up some 30% from 2019 levels. That is people's pocketbooks being pinched and having to make tough choices around their personal finances. You hear it in the earnings reports too. Look at some of these retailers. People are going down market. They're spending less. The average ticket price is a lot lower, and they're picking cheaper items. Even the fast food stores are offering bigger discounts now to bring us back in.
I actually saw McDonald's has some new value meal. I think
McDonald's, Wendy's, everyone's doing it.
I was going to say White Castle, Wendy's, one of those put out another one. They realize that people are starting to get a little tighter with the purse. Thank you so much, Caleb Silver of Investopedia. Check it out. Thank you always, Editor-in-Chief there, Caleb Silver.